Hello YouTubers, and welcome to the weekend edition of the Independent Investor. I'll just go over a few major events and the major indexes over the last week. Basically the markets continue to drift up. You can see the NASDAQ is staying well above its moving average, and the trend has been pretty steady, increasing quite a bit now. From over a year ago we were around 5,000 up to 6605. Again, it's pretty broad. I was starting to take note of the Russell. Sometimes towards the end of the bull market you'll see the smaller stocks or the breadth of the market kind of flatten out, while your leading stocks like your Google's, what we're call now the FANGs, your Facebook, your Google, Netflix, and Amazon, kind of take the leadership and continue with that leadership while the rest of the market kind of falls away a little bit. But the Russell did break out just about a month ago there. It has kind of caught up. So this is difficult because the technicals still seem to be relatively strong across the market. And even though the market is getting very expensive, which I'll show shortly, I did go to cash over the summer. Just kind of got scared a bit out of the market. I think at one point I was almost 60% cash. I have slowly put some money back to work. When I find something that's of reasonable value, I've also found some dividend plays in Canada that are paying a good dividend and generating fairly good income and not too overvalued. So I put some money back in there. Same, I found some preferred shares, TransCanada for one, and a Canadian utility paying the preferred share price. It came down a bit, and the yield was about 5% or just over 5%. So that helped bring my income back up. But the market's a bit scary. We see it just seems to keep drifting higher, even though we've got Mr. Trump in the States making just outlandish statements, or tweeting outlandish statements one after another. Last week it was by Mr. Prime Minister Trudeau was in the States. He mentioned that he was just going to tear up the NAFTA agreement, which started, free trade in the 1980s with Brian Mulroney in the 80s, and has been an agreement between Canada and the United States for decades now. And of course Mexico was added with NAFTA. Not something I totally agree with. I agree with free trade, but only really if countries have roughly the same standard of living. But just to come out and tweet that, like he has been on various issues, just he's going to tear it up, it's extremely undiplomatic. But what I find a little bit more alarming is the market doesn't really respond to it. Either they've just gotten used to Trump's statements now and don't take them seriously, or these markets just seem to have a mind of their own. In the past, a statement like that would have maybe dropped the market 1% or something like that, because of all the implications and the uncertainty, and markets don't like uncertainty. So it's hard to know what's really propelling these markets. There has been some mixed signals that Europe economies may be picking up a little bit. Of course, we still got the Federal Reserve banks, printing money. I now read that the United States, the Fed there, is not going to be really printing any more money, maybe letting some assets roll off the balance sheet. But as I mentioned before, their balance sheet went from about 800 million up to 4 trillion. Now we also have the EU bank has blown their balance sheet up now to about 4 trillion, and Japan is also 4 trillion. So again, this money is just out there circulating around, causing these asset bubbles in different locations, and we don't know really how it's going to all play out in the end. The treasuries are staying reasonably flat. These are the U.S. treasuries, so we can see the 30-year is about 2.8. We've got the 10-year about 2.28. When they started to increase rates last year, it came up, and it's still reasonably low over a long-term period. That's still supporting stocks to some degree, because in the market you really have two options. You can be in the bond market or you can be in the equity market. So there's nothing very appealing right now in the bond market, and we've even seen something that I don't think has been written in any textbook in economics written before this century on negative interest rates. I mean, it's just something nobody thought could ever happen. So though the equity markets are expensive, a lot of people are saying the bond market is more expensive than an extreme bubble. And I see that. Would you want to buy a 10-year bond at say 2%? If the longer you go out, if interest rates move shortly up in the short term, then you're gonna, that 2% will just evaporate because of the drop in the bond prices. So you'll take a capital loss. So that's kind of what we have. Also, another thing is the VIX, which is the volatility index, which a lot of people have been talking about. It's again, it's showing really very low. I mean, this is just over the last year, but if we were to look at a longer period of time, we can see it's down to, has been down to multi-decade lows. Of course, we saw in the financial meltdown in 2009, it got up to almost 80 there, which is abnormally high. But in the past, it used to be in the 20 area. Again, this is just a reflection of the volatilities in the market, and volatility is correlated to risk. And I kind of take the contrarian view a little bit. Usually if the volatility gets very, very low, people are content, thinks everything's good, and that's usually when something kind of sneaks up. So it is a little bit concerning that we're at these high valuations. We have sometimes news that's not that positive, and the market just doesn't seem to react. Also, if we look at the dollar index in the United States, it came up quite a bit when Trump came in. We can see here this rally here, but it's actually dropped quite a bit from 104 down to 92. The dollar index is just basically the US dollar divided by different currencies, like the euro I think makes the biggest component, the British pound, and I think the Japanese. So it's just a measure of the US currency to a basket of other currencies, fiat currencies. And I think some of this, we had this run here, I think because the Fed, the United States Fed was one of the first ones to say they were going to increase interest rates and stop quantitative easing, so that kind of gave a bit of strength to the dollar. And then I think some of this unwinding here is Trump, a lot of his policies aren't really coming to fruition. We see that with the Affordable Care. He tried to rescind that, it didn't work out. He did talk about a lot of infrastructure spending in the United States. That hasn't really materialized. Now there's tax reform. If that goes ahead, the United States does have one of the highest corporate income tax rates at 35%. He was talking of bringing that down to about 20%, which would be good for corporate earnings and the market. But again, it's difficult in the States to pass legislation because it has to go through the House and also has to go through the Senate, and there has to be a pretty broad consensus. And I wonder if Trump is really capable of that, the way he tweets and sends out these messages. It's not really conducive to coming to an agreement with a lot of the parliamentarians. So I think that's why when I did see that too, I have separate U.S. accounts where I can to trade, just so I'm not getting dinged on the FX all the time, charges by the banks. But I did quite a few months ago, sold some of my U.S. Positions and moved them back into Canada, because that was a fairly large move, like 10%, which might have been more than I would have got return on my investments. So that's something to be aware of when you are investing, is the exchange rates between different currencies. So I'll show you one other thing here as far as the market, maybe where we are. It's called the Elliott wave theory, something I've known about for a long time, but I could never really get it to fit. It's basically saying that the market can move in 5 waves. You basically have your up wave, a counter wave down, another up wave, another counter wave down, and another kind of final up wave. And the last wave, which is wave 5, is kind of where people become exuberant. The news is good, positive, but usually is the last wave. So we can see here, and wave 3 is the